Today we'll be talking about individual retirement accounts, otherwise known as IRAs. IRAs are a popular way to save for retirement, but there are different types of IRAs and rules you should be aware of. I'll be covering what you need to know about traditional IRAs, Roth IRAs, rollover IRAs, SEP IRAs, and simple IRAs, as well as how to contribute to an IRA, how to make money with an IRA, how to take withdrawals, and much more. By the end of this video, you should be able to determine why you might need an IRA and which one is the best for your specific financial situation. Thank you so much for being here, and don't forget to smash that like button and subscribe button to help others find videos just like these and to stay up to date on any future videos we release here at The Modest Wallet. Let's first start by defining what an IRA actually is. An IRA, otherwise known as an individual retirement account, is a tax-advantaged retirement savings account to which you contribute either pre or after-tax money, and it grows on either a tax-deferred or tax-free basis. In more simple terms, it's a long-term savings account that individuals with earned income can use to save for the future while enjoying certain tax advantages, especially those who do not have access to an employer 401k. And speaking of 401ks, if you haven't already checked it out, we do have a video that I'll link here and in the description all about 401ks. Back to IRAs, how do they actually work? Anyone with earned income can open and contribute to an IRA, including those who have a 401k account through an employer. The only limitation is on the total amount that you can contribute to your retirement account in a single year. When you open an IRA, you can choose to invest in a wide range of financial products, including stocks, bonds, exchange-traded funds, ETFs, and mutual funds. So it's as simple as that. Open an account up if you meet the income limits and pick and choose the financial products you want to invest in up to $6,000 in 2022 and $6,500 in 2023. When it comes to IRAs, there is quite the variety to choose from. So now I'm going to try to give you the basics on each so you can determine which one might be what you're looking for. Let's start with a traditional IRA. A traditional IRA is a tax-deferred account, which means you don't pay taxes on the money you contribute until you withdraw it during retirement. This type of IRA is popular because contributions are tax deductible and you can contribute up to $6,000 for 2022 and $6,500 in 2023, plus an additional $1,000 catch-up contribution if you're over 50 years old. A Roth IRA is a tax-free account, which means you pay taxes on the money you contribute, but not on the money you withdraw during retirement. Contributions to a Roth IRA are not tax deductible, but the earnings grow tax-free. You can contribute up to $6,500 for 2023, plus an additional $1,000 catch-up contribution if you're over 50. A rollover IRA is a type of account that allows you to transfer money from one retirement account to another, such as from a 401k to an IRA, without paying taxes or penalties. A simplified employee pension, or a SEP IRA, is a type of account designed for self-employed individuals or small business owners to save for retirement. Contributions to a SEP IRA are tax deductible and you can contribute up to $61,000 for 2022 and $65,000 in 2023, or 25% of your net self-employment income, whichever is less. A savings incentive match plan for employees, or a simple IRA, is a type of account that allows employers and employees to contribute to the same retirement account. Contributions to a simple IRA are tax deductible and you can contribute up to $14,000 for 2022 and $15,500 in 2023, plus an additional $3,000 catch-up contribution if you're over 50 for 2022, or an additional $3,500 in 2023. As you can see, lots of options when it comes to the different types of IRAs. Now that we know all about the different types, how do I contribute to an IRA? To contribute to an IRA, you must have earned income such as wages, salaries, or tips. You can contribute to both a traditional and Roth IRA as long as your total contributions do not exceed the contribution limits for the year. Speaking of that, let's clarify what your contribution limits are. For 2023, the contribution limit for both traditional and Roth IRAs is $6,500 plus an additional $1,000 catch-up contribution if you're over age 50. If you have both types of IRAs, the contribution limit applies to both accounts. The nice thing about 2023's contribution limit is that it's $500 more than the 2022 contribution limits. And remember, if you're over 50 or older, you get to contribute an extra $1,000 as a way to essentially, catch up if you started contributing later in life. How do I make money with an IRA? There are different ways to make money with an IRA, such as investing in stocks, bonds, mutual funds, or exchange-traded funds, ETFs. The earnings from these investments grow tax-free until you withdraw the money during retirement. It's important to keep in mind that investing comes with risks and there is no guarantee of returns. It's a good idea to consult with a financial advisor before making any investment decisions. Making money with your IRA is great and all, but being able to get it out eventually is key. So let's briefly discuss how to take withdrawals from an IRA. Withdrawals from an IRA are generally allowed penalty-free after age 59.5 years old. However, if you withdraw money from a traditional IRA before age 59.5, you may face a 10% early withdrawal penalty in addition to paying income taxes on the withdrawn amount. With a Roth IRA, you can withdraw your contributions at any time tax-free, but you may face penalties and taxes on earnings if you withdraw them before age 59.5. Required minimum distributions, RMDs, are withdrawals that owners of a traditional IRA account must take every year after they reach a certain age. This age has been revised several times, and as of January 1st, 2023, an account holder must begin taking money out in the year he or she turns age 73. Once you reach age 73, you must take required minimum distributions, RMDs, from your traditional IRA each year. The amount of your RMD is based on your account balance and life expectancy, and you'll be required to pay income taxes on that distribution. There is a severe penalty of 25% of the balance of the account if you do not do this. Roth IRAs, on the other hand, do not have RMDs during the account owner's lifetime. Let's just briefly distinguish between traditional IRAs and Roth IRAs. One of the main differences between traditional and Roth IRAs is how they are taxed. Traditional IRAs are tax-deferred, meaning you'll pay taxes on the money you withdraw during retirement. Roth IRAs, on the other hand, are funded with after-tax dollars, so you won't owe taxes on your withdrawals during your retirement. The decision to choose a traditional or a Roth IRA depends on your current and future tax situations. If you expect to be in a higher tax bracket during retirement, a Roth IRA may be a better choice, while a traditional IRA may be more suitable if you expect to be in a lower tax bracket. Alright, so how do I open up an IRA account? You can do it online or in person through a bank, brokerage, or financial institution. You'll need to provide your personal information such as your name, address, and social security number, as well as your employment and income details. Once you've opened an account, you can start contributing to it and investing your money according to your investment strategy. So let's recap how to open up an IRA account step by step. Number 1, decide between an online broker or a robo-advisor. Both of these options are pretty simple. Robo-advisor may be more hands-off, but both are pretty simple options. You don't need to be an investing expert for either. Number 2, choose where to open your IRA. There's a ton out there, and almost all brokerages offer IRA options. Number 3, open the account. It sometimes is as simple as clicking a button, opening up an IRA. And number 4, fund your account and get started. Remember, you can't make money and save for retirement if you aren't putting anything in your account. Once again, $6,000 in 2022 or $6,500 in 2023. If you're 50 or older, you can add an extra $1,000 to that number. Remember, you have till the following April to fund your account for the previous year if you need the extra time. IRAs are great tools for a wide span of individuals. According to Fidelity, many financial experts estimate that you may need up to 85% of your pre-retirement income in retirement. An employer-sponsored savings plan such as a 401k might not be enough to accumulate the savings you need. Fortunately, you can contribute to both a 401k and an IRA. Remember, an IRA can help you supplement your current savings in your employer-sponsored retirement plan. It can help you gain access to a potentially wider range of investment choices in your employer-sponsored plan. It can help you take advantage of potential tax-deferred or tax-free growth. You should try to contribute the maximum amount to your IRA each year to get the most out of these savings. That's it for today's video on IRAs. We hope that this information has been helpful and that you have a better understanding of the different types of IRAs, how to contribute to them, how to make money with them, and withdraw from an IRA. Let me know which IRA you prefer in the comments below. And also, don't forget, saving for retirement is crucial, and an IRA can be an excellent excellent way to achieve your retirement goals. Thank you so much for watching this video. Give this video a like for the YouTube algo. Don't forget to subscribe to our channel. Stay up to date on future videos, and I will see you in the next one.